What is a robot tax? Have you ever thought about what happens when machines start taking over jobs? This brings us to a fascinating concept known as a robot tax. So, what exactly is a robot tax? It is a proposed tax aimed at companies that replace human workers with automated machines or robots. The idea is pretty straightforward. When businesses use robots instead of hiring people, the government misses out on income tax revenue that would have come from those workers. To tackle this issue, a robot tax would require companies to pay taxes on their robotic workforce. This could mean taxing each robot similarly to how a human employee's salary would be taxed. Alternatively, it could involve increasing corporate taxes based on the profits gained from using automation. From a socialist viewpoint, the robot tax serves a vital purpose. It aims to reduce the negative social impacts of automation and job displacement. Automation can lead to job losses and lower wages, which often results in greater economic inequality and social instability. By implementing a robot tax, the government could generate funds to support workers who have lost their jobs. This money could be used for retraining programs, education, and social welfare initiatives, helping to redistribute wealth and maintain social harmony. There are two main ways to implement a robot tax. One approach is to impose an income tax equivalent on robots. This means companies would pay taxes on robots as if they were employees, based on the salary of the human worker they replaced. The second approach involves higher corporate taxes. Companies would pay increased taxes on their profits, reflecting the financial gains from replacing human labor with automation. The revenue generated from this tax could be directed toward programs that are hard to automate, such as education, elder care, and social services. These areas requiring human empathy and interaction, making them essential for society. Supporters of the robot tax, including notable figures like Bill Gates, argue that it could slow down the pace of automation. This would give society more time to adjust to changes in the job market, preventing sudden mass unemployment. Additionally, the funds raised could help support social programs that address and met human needs. However, there are challenges to consider. Defining what counts as a robot for taxation can be tricky. Companies might also find ways to avoid the tax by integrating artificial intelligence into broader machinery. Despite these hurdles, the idea of a robot tax remains relevant as automation continues to replace jobs, particularly in industries like manufacturing, transportation, and services. In the context of socialism, a robot tax aligns with the goal of reducing economic inequality and protecting workers from the adverse effects of automation. It is seen as a tool to ensure that the benefits of technological advancements are shared more equitably across society. This approach highlights the importance of social responsibility and the need for public intervention to manage technological changes in a way that benefits everyone.